In discussions about inheritance tax planning and what you can do about inheritance tax during lifetime, unsurprisingly, what you can do in relation to planning with your main home often comes up. Unsurprisingly also, HMRC have done a pretty good job in generating legislation to enable you to make an acceptable and effective gift of your main residence. However, there are a couple of exceptions. First of all, it's important to remember that the gift with reservation rules and the pre-owned assets tax rules are aimed to catch you if you make a disposal of your property but continue in occupation of it. That's broadly what it is, because then you've reserved the benefit. You're continuing to enjoy the residence inside that property. However, what is occupation? First of all, it depends on whether the occupation is significant or not. Insignificant occupation won't catch you. There's a kind of let out for that. So you could go back to a property that you've given away, say to your children, and live there, even without the children not being there. So just you occupying on your own for up to 2 weeks a year. That counts as insignificant, so it's ignored. You could live there for up to a month in total a year, but with the children who you've given the property to, or the donees, whoever they are. I say children because that's who it will mostly be given to. So they're the two exceptions for insignificant occupation. How about significant occupation, more than that? Is there any way that you can significantly occupy a property and not be caught? Yeah, there are two main ways, really. One is to pay a full market rent or a full premium for a lease. So paying a full market rent means paying full market rent every month or every week or however frequently you want to pay it, but a full market rent, judged to be full market rent at arm's length, to the donee. That gift won't constitute a gift for inheritance tax, actually, because it's not a gift. Transfer of money as rent won't be a gift. So that's one way to do it. The other way, of course, point there is that you do have to make the payment, so you need to have the cash to make the payment. Transfers actually have to be made, and that will count as income in the hands of the person that receives it, i.e. the person who you gave the house to. The other way is the joint occupation route. So that would work for people who are happy to give a share in their property away. There's nothing in the legislation to say how big or small that share should be. To give a share in the property away to a donee who then occupies the property with you. That's really important, that point, that the donee must occupy the property with you. The point they'd stop occupying the property with you, then you've got to give a reservation. It's not a gift with reservation if you jointly occupy the property. Don't need to pay a rent, jointly occupy the property and each pay your appropriate share of the running expenses of the property. But remember, as soon as that donee leaves the property, if they do ever, because you have a row or something, then if they leave for, properly leave the property, then the reservation of benefit comes back in. The extra benefit of the joint occupation, where it works, and it only rarely works. So it's only a few cases where it does work. But where it does work, one, you don't have to pay a rent. And second, when you die, say you die ahead of the donee, then the value of your share in the property has been diminished a bit because your share is now a share of a jointly owned property. So you get a kind of 10 to 15% discount on the value of your property because it's a share in a jointly owned property. And the last point to bear in mind is that when you've given a share in a property to the donee who doesn't occupy it as their main residence, which of course in that joint occupation let out, they would, if you're paying a full market rent to someone, their property ownership is not of a property which is their main residence. So from the point of you giving it, any capital gain that accrues when it's realised will be subject to capital gains tax. All of this, as of course you would expect, is covered in a lot more detail in Techlink.